We have another round of big tech earnings and we need to talk about it. I am Dr. Stock, Doctor of Education. And do you know what a pigeon's favorite instrument is? It's a stick guitar. All right, we're going to start off by taking a look at SPY and QQQ because they got routed yesterday from the FOMC meeting. Just a wild day in the markets as we were watching them. And then we'll get on to Apple, Amazon, and Meta as they have their earnings in the after hours. I'll also tell you later in this video about where you can see my buys and sells, about my options course, and about how you can learn to do technical analysis to up your trading game. In the meantime, let's take a quick look at the economic calendar. Challenger job cuts coming out at 7:30. 8:30 we have initial jobless claims. Then tomorrow we have non-farm payrolls and the unemployment rate. These are going to be absolutely huge to watch out for. Besides the earnings that we have, something that really impacted the markets yesterday, if we take a look at the CME Fed Watch tool and we go to March and we take a look at this, this was a 50-50 at some point in time during the day yesterday. It also went 60% cut down to 40% hold for yesterday's meeting results. And well, you can see where things settled for us, at least as of today. 65% chance that for March now we have a hold, and that 35% chance that we have a cut for the meeting. And when you look at what that was yesterday, it was much closer to a coin flip, favoring the fact that we would get a cut. Now it favors the fact that we're going to still be paused when March comes around for that meeting. And so that is one of the reasons why we saw that drop in the markets that we did, is that shift that we have in the probability that Jerome Powell and the rest of the FOMC are going to actually cut at the next meeting. This will evolve daily, so be watching this over time. So let's get into the indices themselves. So I'll bring that down and we'll put up the charts that we have here. So we're going to start off with SPY. And so far, you can see the sort of a trend that we're on right now. So SPY near term is in this bullish channel that we have. Still not quite at the bottom. I expect significant support should we come down and retest it to come in right around that 478, 479 level. So be on the lookout for that one. Massive volume yesterday as things kind of sold off and cooled off on us. We are still in the bullish territory on the daily charts. And when we go into the weekly charts, the RSI is suggesting that we're still in bullish territory, no longer in the overbought zone. So we're going to be on the lookout for that and sort of watch to see where we could possibly peak out. Moving on from there into the Qs. On this one, we had that rising wedge formation, likely impacted a lot by big tech, and we got big tech earnings, not great for us. And then that got compounded by the FOMC meeting. Another strong pull down for that, down about 2% yesterday, recovering a little bit in the pre-market hours. Line in the sand for us for QQQ is right at about 414, 413, 415, somewhere around in there. What I have for this trend line right here, if I put my cursor on it, is about right between 414 and 415. Getting below that line, the 50 is our next line of defense, which is still a fair way to go down from that, another 2% down from that trend line. That will keep on creeping up towards it over the time. As long as these candles are up above the 50, it will keep drawing up towards it. We're going to be on the lookout for that. Getting that retest of support off the 50, as long as we don't have massive changes in market sentiment, should actually be a very bullish thing should we pull down to that level. So we're going to be on the lookout for that. Getting over into the tech stocks, moving over into Apple, you can see that we are on this slow, sluggish rising wedge pattern. And what we have from the previous peaks is that we actually might be narrowing. We're going to have to wait for time to pass and see, but it is possible that we're starting to narrow down on a price. So let's get that going, and that we're starting to see a consolidation pattern. And we're going to have to look to see where we peak out on this thing. It is possible that we start rising back up. Off the earnings, I think that we move back up to about 190, or that we could possibly come down and visit 180. So that's about a $5 move either way that we're looking for Apple. The 200-day is still right in there. We're down below the 50. Should we come down and we retest that 200 and bounce off of it, that could be another bullish thing for us. That could also be a triple bottom. Should we break down through it, that could be something that could lead to a death cross, and something like that would be like weakened demand for Apple devices. So poor outlook, poor guidance could be things that, or even poor results could be things that could drag Apple stock down. We want to keep our eyeballs on specifically for Apple, the 200-day, which is right here, which is currently at about 182. Like I said, breaking down below that, we have a trend line to catch us right at about 180, and then breaking down below 180, falling through that support, that we could keep on traveling down and revisit some of these other peaks. It's going to be a very slow descent should we do that. I don't expect it to be a very rapid descent on us. If we go to the upside on this, should we make it to 190 off of earnings, then we have room up to about 195 before we hit the top of this trend line. then what we have is a confirmation of this consolidation pattern, and what we want to see is which way we break out of that consolidation pattern. So for Apple earnings, because we have sold off recently, I think a lot of the pain has already been priced in. I think it's possible we get a little bit of levity coming out of this and that we start to pull back up, especially after yesterday's massive sell-off that we had across the indices. Moving over into Amazon, we have, and let me grab my paintbrush for this one quickly, we have a bit of an inverse head and shoulders going on right now. The neckline is right here across what we have. That is the support for earnings, by the way. So should we sell off down to 147, I think will be that bottom. The top on this one, I think, is going to be at about 165. So I'm going to be watching for that. And about the more recent rising wedge pattern that we have here, should we not continue in a bullish direction, if we break out of the bottom of this, we have the 50 to catch us right at about 150. That's the 50 EMA and SMA. They're pretty much at the same price. Falling down below that, we have the 200 still as some massive support for us, among other supports like historic support that would be in there, like 145 and so. So we'll have to be watching for that. I think we will start to have trouble with the price action. Should we rise up, I think 165 is going to start giving us some trouble. Should we continue in a bullish direction for right now? And we do want to pay attention to this rising wedge pattern to see what's going on there. So moving over into Meta, off their earnings, I think that we peak out at about 412 to 413. If we stumble on their earnings, I think that could take us down to about 375. And when we take a look at the journey that Meta's been on, going back just to end of October, beginning of November of last year, this thing was down under $100 per share and has 4x'd since that time. So absolutely incredible to see that return. The heavy spend from that large investment into the metaverse has turned around into an AI story for this one. And in that AI movement, what we want to look for is how their advertising revenue has changed. Have they really optimized on that? Have they been able to capitalize and fill out the bottom line on their earnings as a result of the AI spend? And a lesson that I think that we've heard from and that we're learning from big tech right now is that they're in the spend phase of that, looking for really how to capitalize in the best way possible that translates to their bottom line, to their earnings. And that's probably going to hit the top line first while we're in the spend phase. So even though the revenues might still be good, they won't necessarily be great until we catch on to that one. And then really, once we figure out that spend part of it that turns back into a return on investment, ROI, and starts filling out the bottom line, then the optimization is going to come in. So I don't know if now is that quarter that we start to see that. If we go off what we saw from big tech, from Google, and also from Microsoft, and also from AMD, like I said, spend phase right now, heavy investment, finding the next big thing, finding AI's place in this that really turns into a return on investment. I think that 2024 is going to be a wild year for looking at that and deciding where the leaders are and who's really going to catch on to the next S curve with the big tech. So I am cautious about 2024 in that way with the big AI companies, and Meta being a key player in that part. I think that it's a company that's most definitely continued. I think there's a reason for all this bullishness that we're seeing. I think there's a lot of validation to this price action, and I also think that there's reason to be a little bit skeptical about the earnings for this quarter, and I wouldn't be surprised should we come back down to this 375. We're also in a tiny rising wedge pattern. It's not the best one that I've seen because of this parabolic look that we have right here, but we'll see if that's one that we come down and we retest support on and then continue up a little while longer, back up into the 400s before too long for Meta. And of course, there's always the overall market sentiment to pay attention to as well. Let me put this up here for you real quick. If you guys want to see my buys and sells how I'm playing this market, you can check it out over at the Patreon. That link is down in the description. I also have my options course over there, so you can learn about how to use options to amplify the power of your portfolio. And if you want to learn about technical analysis to up your trading game and really learn to capitalize on the markets as the different movements happen, there's a link down in the description for the technical analysis course. Massive discount by using the coupon code TRADE, TRADE. So go ahead, snag that, type in that coupon code, get those discounts. This course does build up over time. It does give lifetime access, and the price also does go up, and the coupon code does expire within the next week or so here. So make sure that you're on the lookout for that. So thank you guys for watching this video. I really do appreciate it. As always, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and I'll see you in the next video.